Hello traders, hello everyone, and welcome to our new video here on TradingView. So I want to give you the latest updates of my views, how I see the markets going forward. So we have seen since start of the year, US dollar here in green and US yields in red. They are both moving to the upside. They are extending the recovery, and the reason is because last Wednesday and then on Friday, both indications from very strong jobs and Powell as well said or hinted that it may be too soon to look for potential cuts. Okay, they need more economic data. So it looks like the market went too aggressive, too far, looking for potential cuts already in March, and maybe this reaction will be delayed, and that's why we are seeing market repricing some of the recent moves. But I still think that there can be some very nice potential resistance for US dollar and for US yields. Even if Fed will delay the potential cuts, I don't believe that we will go back towards 5%. I think that US yields on 10 year could potentially see a shift lower in the upcoming months towards 3%. Okay, so of course we are just now testing the higher resistance levels. So if this US yields would really come to the downside, well, that really depends on speculations or forecasts regarding the inflation. And if we take a look here on energy or crude oil, we can see that there is a very nice reversal to the downside through this bear flag that is happening right now. So if crude oil will be able to stay bearish and even see a continuation lower from this head and shoulders pattern with the potential broken neckline, then I think that further weakness here or on energies will force maybe US yields and US dollar to turn to the downside as well, because these lower energies would mean that inflation will come to the downside. And then it means that speculators will most likely believe that Fed will not be looking for higher rates, rather to lower rates, especially if in the upcoming months we will approach this 2% target. So I still think that crude oil maybe could be leading the markets here. Other markets are lagging. So if my assumption is correct, then of course I would be looking for continuation down here on crude oil and dollar index, and US yields will also follow to the downside. Now, if we take a look on US yields as well, here I have, I think I have it here. Okay, so here we have the wave count, the higher degree time frame. Notice that market might complete this 5-wave rise followed by a very sharp reversal here to the downside, and now we are just seeing a consolidation when speculators are still not really sure if there will be cuts in the upcoming months or no. So that's why we are seeing this corrective rise. But I still think that there is a greater chance that we will continue to the downside after this wave B rally rather than touch 5% or even break higher. So I assume that this cycle will resume to the downside, that you are now in the middle of the higher degree correction that is still incomplete here on the US yields. And if this market will really turn to the downside, then dollar index, in my opinion, will again turn back towards 100 level. Traders, thank you very much for your attention. I hope that you enjoyed this video and talk to you soon.